Hello everyone, welcome to Learn Well. Today we will discuss the need for valuation of goodwill. The need for valuation of goodwill depends on the forms of business organization. Basically, there are three cases in which the need for valuation of goodwill is considered. The first case is in case of sole trader. In case of sole trader, the need for valuation of goodwill may be arise in the following circumstances. So basically, there are 3 points in which the goodwill is valuated. The first is when the business is sold. The second is when partner is admitted as a partner in a business. Third is when the business is converted into a company. We need to evaluate the goodwill in the three these sub points. The another case is in case of partnership firm. In case of partnership firm, the need for valuation of goodwill may be arise in the following circumstances. The goodwill is to be evaluated in the following circumstances: when the new partner is admitted into a partnership firm, when the partner retires or dies, when there is change in profit sharing ratio of the existing partners, when the partnership firm is converted into a company, or the fifth point is when the whole firm is sold out, then we need to evaluate the goodwill. The third case is in a case of a company, the need for valuation of goodwill may be arise in the following circumstances: when the two or more company amalgamates, then we need to evaluate the goodwill. When the business of a company is sold out to the another company. Now step into the next part is methods of valuation of goodwill. There are 7 methods of valuation of goodwill. The first is arbitrary valuation method. In arbitrary valuation method, if a company decide to purchase the business of the another concern and it is the mutually agreed upon, the purchasing company will pay a specified amount of goodwill in a lump sum. The amount so agreed upon is called as arbitrary assessment. By taking an example, we will understand how the arbitrary valuation method is used. The example is X Limited purchases the business of Y Limited, and it is the mutually agreed upon that the X Limited will pay the Y Limited a sum of 1 lakh rupees on account of goodwill. This is called as arbitrary assessment method because they mutually agreed upon a one value that he will pay the specified amount of goodwill in a lump sum to the Y Limited. The second method is average profit method. Under this method, the goodwill is to evaluated as under. The formula of average profit method is goodwill equals to the average profit into number of year purchased. Thus, the valuation of goodwill under this method involves 2 steps. The first is to ascertain the average profit, then multiplying by it with the number of year purchase to find out the goodwill. By taking an example, we will understand how the average profit method is used. For example, on 1st January 2019, X Limited agrees to purchase a business carried on by the Mr. A. The goodwill for the purpose is agrees to be valued at the 3 years. The purchase of average profit of the last 5 years given from the 2014 to 2018. In this case, the value of goodwill is ascertained by adding the profit of last 5 years and dividing it by 5. We will get the average profit. Then multiplying it by the number of year purchase. The number of year purchase is 3. So the 50,000 is multiplied by 3. We will get 1,50,000 as the goodwill. The third method is weighted average profit method. Under this method, the goodwill is valued as under. The formula of weighted average profit method is goodwill equals to the weighted average profit into number of year purchased. By taking an example, we will see how to calculate weighted average profit method. First of all, make a table. Write the number of years, then the next column is of profit. Write the 4-year profit, then another column is of weight. Multiply the profit into weight, we will get the product. Then total all the product, then divide it by with the weights. We will get weighted average profit. Now apply the formula goodwill equals to weighted average profit into number of year purchased. Here we assume by ourselves, but you have to take the given number of year in the question because this is just an example that how to calculate it. So weighted average profit we get 20,000 into 3 equals to 60,000. So the goodwill is 60,000. Next, the fourth method is super profit method. The formula of super profit method is goodwill equals to super profit into number of year purchased. How to calculate super profit? The formula of super profit is average profit minus normal profit. But the normal profit is calculated by capital employed into normal rate of return into 100. We will get normal profit. By taking an example, we will see how to calculate super profit method. X Limited is running its business with the capital employed of 20 lakh. Here, the capital employed is given 20 lakh. On the basis of the previous record, it is expected that the company will earn 5 lakh in future. The normal rate of return is 15%. The super profit will be calculated as under. So, profit expected in future is 5 lakh. Normal profit. Now we have to calculate the normal profit by applying the formula capital employed into normal rate of return and divided by 100. Capital employed in the example given as 20 lakh. Normal rate of return is 15%. Divided by 100 we will get 3 lakh. From profit expected in future less normal profit, we will get super profit. If the goodwill is valued at 5-year purchase of super profit, then the value of goodwill will be super profit into number of year purchase 2 lakh into 5, we will get 10 lakh as a goodwill. So this is the way to calculate super profit method. The next method is annuity method. The formula of annuity method is goodwill equals to super profit into value of annuity. Same way, by taking an example, we will see how the annuity method is used. X Limited is running its business with the capital employed 30 lakh. On the basis of previous record, it is expected that the company will earn 5 lakh in future. The normal rate of return is 10%. The profit expected in future is 5 lakh. Normal profit will be calculated in the same way as we calculated in the previous method. From the profit expected in future less normal profit, we will get the super profit. If the value of annuity is not given, it can be calculated by applying the following formula, but most probably it is given in the question. Next, the sixth method is capitalization of super profit. The formula is goodwill equals to super profit divided by normal rate of return into 100. The profit of last 3 year is given, divide it by 3, we will get average profit of last 3 year. Normal profit is calculated by the capital employed into normal rate of return, we will get normal profit. From the average profit less normal profit, we will get super profit. Then put all the values in the formula, we will get the goodwill. And the last formula is capitalization method. So this is all about this chapter. Thank you for watching the whole video. Please do like, share and subscribe.